As of Wednesday morning, the 26th of August, 2026, XRP is up almost 44% over 7 days, but it has just dropped 5% in 24 hours, trading near $1.44 with a market capitalization near $90.8 billion. That pullback is exactly why this rally is now riskier than the headline number suggests. XRP's futures open interest has jumped 34.49% in a week to roughly $3.66 billion. On Binance, 72.1% of positioned accounts are long, against just 27.9% short. When an asset rises this fast with this much borrowed money behind it, the market is not just pricing in good news. It is building a potential trap. Between the 19th and 21st of August, roughly $44.3 million in net exchange inflows coincided with a $43.74 billion increase in XRP's market capitalization. That is a 986 times multiplier, which crypto analyst Zach Rector attributes to thin order books and limited sell-side liquidity. In plain English, there were not enough sellers to absorb the buying, so prices shot higher. Spot XRP ETFs added $18.38 million on August 21st alone, with Bitwise contributing about $16.89 million, and weekly inflows approached $40 million, the strongest since May. On-chain activity also surged. Transactions per closed ledger rose 150.2% and active users rose 224%. Renewed institutional interest, including reports around Goldman Sachs, and a U.S. Treasury announcement on liquidity support for long-dated debt added fuel to the move. Today's 5% fall matters because the market is now heavily one-sided. Analysts estimate XRP's relative strength index is deep in overbought territory, near 85.4, which historically signals limited short-term upside. More importantly, daily trading volume has fallen by 35.8% to about $3.9 billion. That tells you momentum is fading while leverage remains high. If XRP breaks below the 24-hour low of $1.42, leveraged longs may be forced to close, and that selling can feed on itself. Thin order books mean the same liquidity conditions that pushed XRP up 44% can accelerate a decline. This is no longer just a spot rally, it is a leveraged structure waiting for a trigger. Zach Rector identifies the $1.20 to $1.30 zone as a possible retest area if current support fails. That would still leave XRP higher than before the rally, but it would wipe out much of the recent leveraged gains. Longer term, Canary Capital's Stephen McClurg projects $3 to $4 within a year, and some analysts set targets as high as $27. But near-term evidence points to a cooldown before any further leg up. ETF inflows and institutional attention could provide a floor, yet they are smaller than the $3.66 billion of open interest at risk. Watch whether open interest drops. If it stays elevated while price slips, a sharper liquidation cascade becomes more likely. The 44% weekly gain is impressive, but it was amplified by thin liquidity and crowded leverage, not just organic demand. That is why today's 5% dip is a warning sign, not a footnote. If you are trading XRP, the key levels are $1.42 on the downside and $1.20 to $1.30 as a deeper retest zone. Risk management matters more than the headline price. The same thin order books that made XRP fly can make it fall twice as fast.